XRP faces downside risk as historical patterns point to $1.50. XRP needs to reclaim $2.20 and break $2.23 to $2.24 to regain upward momentum, as technical indicators remain bearish. XRP slipped back under the $2.20 threshold as a daily death cross renewed selling pressure, setting the token up for a critical support test that may determine whether the broader correction accelerates into December. XRP failed to sustain ETF-driven strength, despite Franklin Templeton's XRPZ and Grayscale's GXRP posting 3 consecutive sessions of net inflows. Binance exchange reserves fell to 2.7 billion XRP, the lowest in more than a year, after roughly 300 million XRP left the platform since October. This indicates long-term holders and institutional desks continue to accumulate into weakness, but spot demand has not yet offset short-term liquidation flows driven by derivatives unwinding and risk-off sentiment across crypto. The breakdown from $2.22 to $2.18 confirmed a clean rejection at the $2.23 to $2.24 resistance zone, reinforcing a descending channel that has guided XRP's price for the past 2 weeks. The death cross adds structural weight to this pattern, aligning with a series of lower highs at $2.185, $2.180, and $2.178. Momentum readings remain soft. RSI failed to reclaim the midline on every bounce attempt, indicating persistent selling pressure, while MACD continues drifting deeper into negative territory. Price remains below all major short-term moving averages, and the slope of the 50-day average is now accelerating downward, a condition that historically reinforces follow-through selling rather than immediate reversals. Despite this, on-chain flows show an improving underlying bid. Steady ETF inflows and shrinking exchange balances suggest a transition toward mid-term accumulation, even as the near-term chart remains decisively bearish. The token briefly stabilized at $2.17 to $2.18 during the final hours as activity thinned out, reflecting a pause in aggressive selling but not a meaningful recovery attempt. Overnight price action recovered slightly toward $2.21 before retreating, leaving XRP range-bound but vulnerable. XRP now sits directly on top of the $2.17 to $2.18 decision zone. Losing this shelf exposes $2.08, followed by the broader $1.90 region highlighted by analysts as the key line separating routine correction from deeper retracement to regain upward momentum. XRP must reclaim $2.20 and then break through $2.23 to $2.24 with expanding volume. Without both, any bounce remains corrective. Historical death cross behavior suggests downside risk remains elevated until price reclaims the 50-day average. ETF inflows help limit structural damage but cannot override short-term technical weakness on their own.